All right, good evening, everybody. Good evening, good evening, good evening. And how you doing, Jen? What's up? All right, all right. So let's get everything set up. Actually, I might actually start doing this. I actually um might start doing this. Nasdaq. Let me see if it'll let me do it actually. Let me see if it'll let me do it. No, I guess it won't. I guess it won't. Okay. All right, I tried. All right, so I tried. Okay. So yeah, so what I was trying to do was seeing if I could actually get it to where I can have the DOM, have the hourly chart, and have the tick chart. But it's not gonna let me do it, so that's fine. Okay, so on today's schedule, so I'm going to over the weekend I will work on creating a schedule for the NA meetings. Now that we're doing them live, I think this was our first week doing it live. And all this week, I think all of our plays actually played out. So I'm actually proud of the accomplishment and what we were able to accomplish this week. And we'll continue to do that. But let me get everything, get this back up. Okay. All right, so let's get started. So in last night's NA meeting, we definitely got the play that we was looking for. We definitely got it. We got 90. I think it was a 90-point play on the Nasdaq. We called for price to tap into 630, I believe. Yeah, 630. This was the play that we was looking at last night. And if you got in at that 630 call out, price traded all the way up to almost 730. So this was almost a 100 point, 99 point play if you took it from the call out to the apex of this move. So I'm very proud of this call out right here. But obviously, at the end of the session, the bears took complete control of this market and price traded lower. I kind of was expecting this because the way that this market is right now, we have lower lows and we have lower highs. And in order for the bulls to be successful here, the market would have to have trade up past this range. Actually, let me just draw this out. So the market is making lower lows, the market is making lower highs, and the market really needed to trade through this range right here. And in order for the bulls to be successful, they would need a breakout of this range, a pullback, testing the top of this trend line, and then making that move higher. But because the bulls failed to do so, the bulls failed, the bears took over, and we got this massive move towards the end of the day. And I don't think this is actually, because I don't see my EMAs at all. So let me reload this page. Actually, let me just reload top subject in June. All right, there goes my EMAs right there. Okay. And if all right, so this is support turning into resistance. So we can turn that red. But the market did tap into an area here of support, and you can see the double bottom right here at the end of the session. And that's why we got that. That's why we got price stopping here. So this area right here is definitely going to be crucial for the bulls. Obviously, we got this double bottom. So here at this level, this is where we got this breakout. So we got a breakout from this level. And then we had the bears retesting this breakout area, the bulls coming back in and pushing price higher. Now price has traded right back into this area. And so the bulls are definitely going to have to defend this area right here. I don't expect for this to be perfect, especially with the NQ. She may actually trade into this range a little bit, even possibly trade underneath it, trapping the bears, thinking that this is a breakout short, snapping back into this range, and we can possibly see a move up to retest this range tomorrow at the news. Okay, I got some nice background garden tending sounds, but I do expect for price to possibly trade into this range. So let's actually look at the hour chart. Let's look at that, because the hour chart is definitely a great tool to use, especially when you want to determine the direction of the market. If you basically follow the hourly chart as an intraday tool, most of the time you'll be on the right side of the market, because it is a great tool intraday. So it's obviously bearish. I mean, you can see that the market is trending down. We're making lower lows and we're making lower highs. And in order for the bulls to be successful, we will need to break out of this range. Yeah, we would actually need to break out of this range, a test of this trend line, and then a move up into this range possibly. And you can see this area of consolidation right here as well. So we are bearish on the tick chart, and we are bearish on the hourly chart. I do have a level, or I do have levels here on the NQ. So let me just draw those out right now. Let me draw those out. So I am looking, at least for the NQ, I am looking at the Okay, so this is a very big range. This is a very big range. 530, which is right here. 530 to about 484. 485-ish, 480. I'm looking for price to possibly tap into this area. And there is a low that I'm looking at, 454. And the reason why I'm looking at this, and if I can't see it here, okay, there it is, because 450 is exactly the bottom of this breakout leg. If the market trades below this leg, we can definitely go down even further on the NQ. So I'm going to assume that with all of this area as support, that this low at 454 will be the absolute bottom that price will trade before the bulls really come in and make an attempt to take price higher. So I'm looking for this area from 530 down to 484, with 454 being the absolute bottom. So this is what I'm looking at for the NQ. Let's actually look at the daily chart real quick to see where we're at there. Because we are still, even though we've had 3 bearish days in a row, the overall structure of the market is bullish. That's interesting. All right, so I don't know why that did that. Okay. So this could possibly be an area where this can possibly be 477. $477, 509. Yeah, okay. All right, so let's go back to the tick chart. So kind of adding on to this. So specifically the areas that I'm specifically looking at, I'm specifically looking at $502 or 50, like 50, 5010, 510, 510 through 500. I think if price gets into this range or into this 8-point range, I think this is where the bulls may find support here in this area. And if it does trade to this, there is a level at 484. But I'm going to keep my eyes on 510 and 500 because obviously 500 is going to be that psychological level that everybody likes to buy. And honestly, if it trades past 500, the next level will be 484. But usually what I've seen in the past is once price begins to trade right back into that 500 level, what it usually does, it never really gets to 500. It usually gets in like 510, 505, maybe 502. And then it likes to bounce because everybody is sitting here at 500. And the market likes to front run that 500 level and then run away from it to get people to chase it. And that's what I've seen in the past. And that's what I expect to happen here as well. Obviously, if the market, if this level doesn't get touched before the news release tomorrow, obviously this level is going to be invalidated. We can get a whip back and forth. So these levels are going to be if they hit before the news is released. But if they don't hit before the news release, they will be, you should consider them invalidated. You should. But I think for the most part, I think I got the NQ. 495.54. Okay. Yeah, what's up, NYA? What's up? So if you're just joining, this is the area where I believe that price is going to trade into, and we can possibly see the bulls come in and make an attempt to push price higher, with 545 being the absolute bottom. Because if it trades past this, or yeah, 455. If price trades past this and we don't get a bounce here, then the market is obviously going to be searching for lower prices, because this is going to be the absolute last line of defense for bulls right here. The absolute last defense. And our next level of support would be here at 300, which honestly, I wouldn't be surprised. I really wouldn't be surprised if the market is really trying to correct all of this bullish price action that we got. I mean, like I said, once we broke this level, and I think this was like around FOMC or whenever Powell was speaking. I don't think it was a real FOMC meeting. I think he was at like an event and where he spoke. And after he got speaking, or after he was done speaking, the market just went straight up, just absolutely straight up, no pullback, no nothing. It was like the 2020, 2021 run up all over again. So I wouldn't be surprised if the market is really trying to correct all of this price action right here. However, the market is still bullish, so we'll still keep our trades to the upside. So I don't believe we have CPI tomorrow. We have PCE tomorrow. Yeah, so we have PCE going into tomorrow. Actually, let me and tomorrow is Friday as well. So you already know that Fridays like to run. Fridays like to run. I hate when it does this. I really do hate when it does this. Okay. Yeah, so this is how the difference in actual. So it's when he said he sees no staggering inflation, that they thought multiple rate cuts were back on the table. Yeah. Difference in actual and predictive. Okay, so I'm trying to understand your question. So how will the difference in actual and predictive have impacted? So I'm assuming you're asking. Actually, so you're saying how will the difference in actual and predictive have an impact? So tomorrow PCE will definitely be. Yeah, thanks, Jen. So yeah, so definitely PCE is definitely is going to move the markets. Definitely. Depending on how the market interprets the data, it will definitely influence the markets into our next FOMC meeting, which I believe is June 13th through the 14th. We all know that PCE is the tool that Jerome Powell uses when he makes his inflation decisions. PCE is also a part of GDP. So the market already has an idea of what the PCE is going to state tomorrow. I think we were a 0.1% off I think we missed it by 0.1% today. And initially we had a bullish reaction to that news. And then towards the end of the session, we got it down. Now, this type of price action, we've seen it before, is nothing new. Every major news release, be it Apple earnings, Nvidia earnings, any major news release, we see a bearish move. And once the news gets released, we see a massive bullish reaction to the news. So my bias will be to the upside. That's my current bias. However, I won't rule out that the market will overreact as it always does, and we continue lower. We just have to wait and see how the market wants to interpret the data, because I mean, let's just be honest, us, the small money retail, the only thing that we can do is go along with the ride. So it's not our job to interpret the news. It's our job to just trade the reaction, because these big firms that hire all these analysts and they're spending all this money in reports, gathering data and yada, 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 it's their job to interpret this data. And depending on how they interpret this data, that's how they make their investments. And that's what moves this market. So it's not necessarily a good use of your time to understand what the data is saying, but just to trade the reaction to the data. And that's what's helped me stay on the right side of the market. I mean, even though that CPI data release was complete bullshit, and I will say that I did fight it, and I paid for that, because the market interpreted the CPI release to be good. And even though I believe what I believed, the market still went up regardless of what I believed. So it's just a reminder just to trade a reaction. So yeah, we got PCE tomorrow. We got personal income and personal spending. And this is what, I mean, core PCE is what's really important. But in my opinion, I feel that Jerome Powell is going to be looking at personal income and personal spending, because this is what's going to tell Powell how much money is coming into the average consumer and how much of it is going out of the home. And if more people are now conserving their money, it just says that, okay, that the market, or inflation, not inflation, but the consumer is no longer consuming. And that's bad for the economy. Obviously, we can't have people saving money and not spending it and putting it back into the economy, because it has a domino effect. If the consumer is not spending money, I mean, you see big chains like McDonald's, they're talking about bringing back a $5 value meal because they're losing customers. You see Red Lobster talking about bankruptcy. You see all these fast food chains that's supposed to be affordable to the average consumer now talking about they're not making ends meet on their end. On a side note, I did watch this video that was very interesting, and I will do a deep dive into private equity. As if you really dig deep into what McDonald's really is, McDonald's is really a real estate company that sells burgers. And if you see it from that perspective, then all fast food restaurants are real estate companies that sell foods. And this is a reason why you should see it that way. Think of when you go down the street, you see a McDonald's. You go further down the street, you take a left turn, there's another McDonald's and another McDonald's. And all these McDonald's are located strategically in areas where it's close to residential homes, urban areas, schools, anywhere to where it's easily accessible to where people get out of, like I said, schools and stuff, they go straight to McDonald's. And the video that I watched about this private equity is saying that a lot of these fast food chains, well, a lot of private equity is buying them up. And they don't necessarily care about the food. They care more about the real estate, the actual location of the building. And if the fast food chain goes out of business, well, it's not necessarily a bad thing for them because they own it, they can turn the real estate into something else that can be profitable. And listening to this person explain, at least from that standpoint, combining it with my understanding that fast food is really a real estate company that just sells burgers, that makes sense. It really makes sense. And honestly, private equity is, from what I currently understand, is behind a lot of good companies lowering their quality because it's just more cost effective just to feed people, but not just to feed as much people as possible, but not have the same quality as they used to. And I don't know if this is what happened to Cheesecake Factory, but I no longer eat there. And I think I did see something about Cheesecake Factory having to sell themselves because of how bad the pandemic was. After the pandemic, the Cheesecake Factory has just been the poorest of quality. And I say that because me and my brother would meet at Cheesecake Factory and we would eat there and have business discussions at Cheesecake Factory. But their quality is so bad now that we don't even go there anymore because of just how bad it is, or how bad it's become. It's like Applebee's now, in my opinion. It's just Applebee's with the higher prices. So we don't eat there anymore. But I think that's a good example of when private equity buys up these companies and run them into the ground. But anyway, going back to this point, this is what's going to be important in my opinion. I feel that if these come in under expectation, then that's going to be seen as a bad sign. But bad news is good news, and good news is bad news. So I guess if it's showing strength, I guess that could be seen as a bad thing because it's good, and Jerome Powell can keep rates higher for longer as he continues to say that he will. And I guess there won't be no rate cuts, and the market will have a tantrum about that and sell off. But I guess we'll see tomorrow at 7:30. So obviously this 7:30 block is going to be important. No one doesn't really care about the Chicago Purchasing Managers Index. No one cares about this. For crude traders, you have crude news at 12 o'clock. CFTC, if you're a commodity trader like gold, metals, energies, crude, I highly recommend looking at this data because it is very helpful. It allows you to see what commercials and institutions are, if they're net long or net short in that specific commodity. So this is definitely important information if you're a commodity trader. And I mean, this doesn't matter. The markets are closed for the weekend. We got Fed Bostic speaking at 5:15, so that really doesn't even matter for real. Says they're getting below the March high. I think we should probably close above it this time. That's monthly also still. Yeah, I mean, I guess we'll see, man. I guess we'll see. I guess we will see because says Japan's large-scale retail sales. I guess that's the bad news. Yeah, because if they don't. This is May. Yeah. Anyway. So yeah, if the bulls don't hold it here, then we're definitely going down. So let's talk about the ES real quick. Okay. Hold on, give me a second. Hold on. Okay, so obviously the trade that we talked about in last night's NA meeting worked out perfectly. If you took this trade last night, I think the apex of this move was like 20, and then it turned around and we got a few extra points in this move. Yeah, about 3 extra points. Yeah, 3 extra points in this move. So this is like a 24-point move. And I did take this trade. I did take profits at the end of the day. like towards like 2 o'clock or 12 o'clock or whatever. Yeah, I took profits up here because I saw that it was going to fail to push past this high. So I just closed the position. I wasn't expecting the bears to do this. I was not expecting them to do this. This was definitely a surprise. I figured that they would actually try to double bottom this and we would possibly range, but obviously the bears mean business because this move down was definitely violent. Let's move this. But I do have another area of support here on the ES. Let me just draw out these ranges real quick. Okay. So as you can see, price did tap into this area of support. And initially the bulls did push price higher. I think this was like a 16-point play right here. Yeah, about 16 points. 16, 13 points. Actually, anyway, doesn't matter. But the bears still knocked price down. So that tells me that price will most likely trade lower overnight. We'll possibly take this low out. However, I've been kind of debating about where price can possibly bounce here, because price can do a lot of things. We can get a double bottom here, but I highly doubt that. I wouldn't take this trade. I wouldn't take this trade right here. A better trade that I'm actually looking to trade, depending on how the market reacts, is here at 232. 232. And it's kind of obvious to see why. That this area right here, probably maybe 233. Yeah, I'll just round it off in 233. Just round it up to 233. You can see that this is where the bulls found support previously here. Well, I mean, price did push up. The bulls came right back into this area. They failed to take price higher. The bears came in, they swept all this liquidity under this low. And then that's when we got this massive move up. So that kind of tells me that there's going to be bulls here. That if price trades back into this range right here, then we can possibly see the market react here. And I actually have, well, no, I'm gonna keep it at 30. No, I'm gonna keep it at 32. Because I think they're gonna want to sweep that low at 33. So I'll keep it at 32. All right, no problem, NYA. We'll see you tomorrow. Yeah. I'm thinking that here at $232 to $227. I think the bulls find support somewhere in this box right here. And how I would actually set my position up is have 15 contracts here at 232 and have an additional 6 contracts here at 227. Now, like I said, I don't think the bulls are going to find support here at 237, but this is I'll just mark it anyway. Because I do see that they potentially could find it here at 237. But I'm thinking that price is going to want to tap into at least this area down here to get to tap into that liquidity. Yeah. I'm thinking that they will want to tap into this area. I think that taking a long trade at 232 through 227 will be a safer trade than up here at 37. So I'm gonna actually take that off. I'm gonna take that off. And obviously with the 10-point stop, you would stop out here at 22. But before taking this trade, I would obviously make sure that you're getting a bullish reaction as price trades into this. I mean, if you get a red candle and there's no bulls trying to buy this, obviously this will invalidate this area to trade, obviously. But if price comes into this area and we see some price action, then I would take this trade, but only if I see the price action to do so. But I do think that this is a great area for the bulls to come back in, though. I do believe that. Okay. All right. So, I mean, I guess that's it for the NQ and the ES. If anybody wants to do crude, I mean, okay, I guess I'll do crude next week. I'll do crude next week. Yeah, I'll just do crude next week. But all right, so for right now, this is all I have for the NA meetings. I shared with you my levels. Obviously, these levels will be invalidated if they don't happen before the 7:30 release, obviously. However, if price does trade into this overnight, I'm going to be looking for both instruments. Bulls accepting price in this area, getting in as low as possible, obviously at these areas, for a retest of at least higher structure. But if there's no questions, I'm going to end the session here. All right, guys. We'll do this again. The stream starts at 8:30. Yeah, 8:30 Central Time at New York Open, where we do this live. We go over our trades, we make money, and we do that every day. So, yeah, I'll see you guys then. Peace out.